Good evening. Ira Epstein with your SPDR ETF stock market wrap-up for this Thursday, the 20th of April, 2023. You know, this is a week where you're getting this type of action in the markets. I don't know that you're getting directional trades one way or the other. It's a time where you get some trades that had been directional. They're giving you a pullback, and they might be in danger of losing some of the trends right now. If you look behind me, you can see all the stock indices were down. You're getting bids back into the bonds and the notes. No surprise there. We went down to key Bollinger Band, low major moving averages under the market. Market's finding support against that. Why not? As we look at some of the autos, well, why would they be doing well? Musk has declared war, and it's a price war, and he's prepared to go even further. He's got a 19% profit margin. He can cut that in half. Where are they going to go with these cars? In order to compete with him, you're going to be looking at a much more expensive car. And what he's saying is bring your cars on, but people will have choices because I'm going to lower the price of mine. That's pretty rough, and he can produce a heck of a lot of them. Remember, he has the capacity to do it, and he gets certain savings the more he produces. The gold market, GLD, was up a bit. You can see, by the way, what I'm saying in Tesla. And I want to say something I disagree with the press on. I looked today at the SpaceX Starship taking off, and it reminded me of when I was a kid. Now, remember, I'm older. I get it. I'm not an old man, but I'm older. Maybe you think I'm an old man. And I'd sit in a movie theater and watch these serials of these movies. That was right at the end of an era that I was born. It was coming to an end. It was the generation before me, but I remember seeing the Flash Gordons, the Buck Rogers. These were what your father and their grandfathers would tell you about. And this reminded me of it. And people are going, well, it blew up. Well, he never thought it was going to be successful. It was 33 engines. Number one, would they all fire together? They didn't. I think 6 didn't fire or 7 didn't fire. Number two, it was never intended to go up in orbit and land back down the way he's accomplished with the other ships. This is a monster. A 40-story building taking off, the most powerful thing of all time, and then they had to let it go. They blew it up for safety purposes after minutes in the air. Do you know how much information they gathered? What they did? He should be applauded. I'm looking here. A failure. It blew up. Oh, my God. People, it's an event that'll go in history books. It's the beginning of real spaceflight, the real beginning, something that you can go and travel into far, far distances. I sound like Star Wars. Something to be going behind me. All right, enough of that, because I do think it was an event that I will remember, certainly. I brought back on Netflix. We'll talk about this now. So maybe we should just go right there. If you take a look, you can see you've got a market that's broken down and finally is filling a gap in here. Do you see the gap down and now it's coming back? Okay, so you had a breakdown, and we can come to this just yesterday, and you can see what I'm talking about. Markets like to fill gaps. So if you think they get just left on charts, they can, but they like to fill them. Number two, the trend is down. Lower highs, lower lows. They're still not going to go into movie theaters with first-run films, by the way. They're sticking with that. They gave you all the reasons why they think the stock this quarter, not the performer, but next quarter into the third quarter, certainly going to be where the performances show up, they say. We have fallen back to what I told you. Now, if we step back together right here, here is the market before all the earnings and so on. The earnings come out, market drops down, you go to the 100-day average. Now, if it keeps going down, terrific. Remember, there's a Bollinger Band here. Remember that? Okay, maybe we should go to the next chart and see it. Right with it. And that's what held the market, and it bounces off. I'm going to repeat to you hundreds of times over the course. Learn how to work with Bollinger Bands. This is where the pros, this combination is a heavy combination for professional short covering. It is not, the way I teach charting, an area to go long. It is absolutely the area to cover shorts because you're not embedded. Embedded means you haven't locked in one of these downtrends when the two lines that make up the slow stochastic are going under 20 for a prolonged period of time. A certain amount of days it has to do it. So we had that. Where's the resistance? Back at 336.21. Is it going to get sold there? I doubt it. You've got a reading under 30. The way I teach charting, one of the factors that you look at is why would you put out short sales in an oversold market? Let it get away from that, you consider it if you're looking to go short. There's certainly no reason that I see to be going long. Let's go back to Charles Schwab. I've been looking at Schlumberger, but let's look at this because you had your bounce. Now, we had looked at this market. We had talked about it. It had come down here, gotten oversold, never did embed. Then it began its correction. Tell me the number that it stopped at on the way up. So you've had your break to the Bollinger Band after you got to it back here and the crash happened. Remember with the banks and everybody was worried about the creditworthiness of Schwab and what they were holding in terms of paper, securities that to maturity. Are they going to have to issue more stock? Do they have enough cash to weather storms? Well, they have enough cash to weather storms. We saw a bunch of banks come out today. I mean, a bunch of banks. And yes, they're getting hurt. Their deposits came up a little bit, but they're down pretty hard. They've recently come back, some of them, but they're alive. And as Brian Moynihan of Bank of America said today, he said, even calling it a crisis, is that the right words? Because it wasn't spread throughout everything. It were 3 banks that got themselves into trouble. 3. That's not the whole banking system. Yes, banks are getting hurt because what the Fed's doing is causing interest rates to go higher. And no, I'm not in the camp that thinks the Fed has to stop. I know you probably are, and most of the people are. They'll stop when they stop. They're going to go in May. I see nothing to stop that, barring some world event taking place. And June is an unknown. I don't think they have any idea. We have to see the fundamentals. If prices start to wobble, if employment wobbles, we saw that unemployment claims, continuing ones today, did go up to the highest they've been since November 21. November 21. That's important. So we'll see if that all comes to play and what it means for them. In any case, resistance up here. Okay, is there a trend? There isn't. UGA, look at how this market let go, but I'm going to repeat over and over and over. If you don't learn how to work with slow stochastics, and when they lose their embedded reading and the meanings of it, shame on you. I bring it up to you all the time here. First goal, 18-day average. After that, I don't know where it's going, okay? It can go, as far as I'm concerned, anywhere that it wants to from that number. Now it's going to get to the target, boom. Now, if it continues down, maybe it's going to go all the way back where this whole thing started. The 200-day average, the 100 and lower Bollinger Band. I don't know. Looks to me like I got that nailed. So I feel good about it in terms of calling the action with momentum. Was this tradable? I don't think so. I think what happened is you ended an uptrend, and then the market gave you a big correction. Does this mean we're not going to get summer driving pressure on the market? Not at all. This is called a washout. The market will go back to the fundamentals. Let this come out. This became a crowded trade, unfortunately. It also was at the mercy of a couple of things. Prices were going up. We saw all that. But remember, in America, our refineries are not as sophisticated as other parts of the world. It's a shame, but it's the way it is. We have to convert them over from winter blends to summer blends. We have to shut down. We don't buy as much crude at that time. We draw on our gasoline stocks, puts the market up. But then when you start producing, the stocks come back into play to a degree too. I'm just giving you the ideas here, but that's part of what it is. In Tesla, is this going to be a breakout to the downside? One day doesn't prove it. You need another day where it comes down, takes out today's low, closes in the bottom quadrant. Divide your price action in the 4, close in the bottom, then it's a breakout. The odds favorite's going to try to give you a bounce. It's oversold. There's no reason to be a buyer. This is a market that's been in a downtrend, and it's accelerating due to the event that Mr. Musk is creating, which is price war. XLF. Higher lows, higher highs, riding the upper Bollinger Band. This is the financial services. Now, you'd been riding it every day. You're backing off. You could fall a little bit more here. But until the red line closes under 79, I think on a further break, the pros are going to try to step in and give this market a buy. In the industrial sector, my eye says you're overbought. These are the first moves over the 100-day average. It didn't do well when it tried it here. You've now had 1, 2, 3, 4 days over. Will tomorrow be able to stay over it? Be interesting. I'm not keen on buying that first one, but let me tell you what my eye is looking at because I'm getting friendlier. And you'll say, in this market? Yeah. What happens if you get the 18-day average to close over the green and the market's over both? Well, then you're putting the upper Bollinger Band right back into play, and I'd be looking at that real hard. Now, it's overbought. I'm not saying to buy it at all. I'm giving you the what-ifs. In stocks, you keep coming down on these. How come cars are still shy of semiconductors is something that I am trying to figure out for you, and I just can't do it at this point. And we'll see what the heck happens with it, but there's nothing right here that I think that you can actually do. So I'm just watching, waiting. When we come to the home builders are running at the upper, as you can see, Bollinger Band. Will they embed? I don't know. But as I told you, they're doing fine. Single-family homes, try to go out and get one. Number one, the supply is short. You got 2.6 months worth of supplies of all homes. All right. When you subtract multi-dwellings and you just stay into the homes, it's about 2.6 mil. That's not a lot. Nowhere near it. It's half of the normal supply. You've got a tight market, and the builders are smart, and they're making you pay up if you want it. They're doing them in certain ways. They're building what I said. They'll build 3, 4 houses, the good ones. Here's the spec houses. Give me money. Away we go. And they've got scale, and they don't have to go to the banks. The big companies can do it themselves. They've got big balance sheets. In the energy sector, higher high, lower low. Now you're back to neutral. What happened with this OPEC? What happened to OPEC Plus driving energy prices up? That didn't last too well. GLD, higher lows, higher highs, momentum down, price up. As long as you don't slip back under one, let's get the exact price on that. It's yesterday's low, 184.28. I think the pros will be buyers. I think they're trying to nibble here at 185.56, stops under there, looking for the higher pricing. In SLV, I don't see anything. You lost the embedded reading. When you lose that, normally, before you go back up to whatever the highest high you recently made is, the market tries to get back to the 18-day average of closes. That's what I expect to still happen. Copper. I thought copper was going to hold way better than it did today. I think anybody long is now on the defensive for the morning. Because it closed near the lows of the day and because you're just barely over the 80 level, intraday, when we reopen, you're going to lose that embedded reading. Now, it needs a strong recovery to regain it during the day. So expect to be on the defensive. That would be my word to you. TLT, as I said, you're down to the area. I don't like when you get short under the first challenge of a 100-day average that you hadn't challenged since back at the beginning of March. So you're here, you got over, you stayed over, now you get right under. You normally get a bounce away from it, and that's what I think is happening. In the dollar index, I remain in the bear camp here. I'm looking for this market to continue down. However, if it gets over, and I know this sounds crazy, 27.80, you got to go back to a neutral stance. It literally can't afford to rally more than 3 cents. And if it does, my work would say, go neutral. Interesting, but that's what the work says. FXE, notice how the momentum slipped away. It's corrected an overbought condition. If it's going to be any good, it's just got to pop here to the upside, and the resistance would be 101.96, so that's what I'd be looking at. You put it all together, you try to come up with game plans, and that's what I do. Now, you know, if you're watching me here on YouTube, if you look in the bottom of our channel, you see the word join. But each morning at about 9, I start recording my Spider ETFs. Why 9? Well, Chicago time is what we're talking about, that's Central time. I want the first half hour of trading when the stock exchange is open to get by me. I know there's an aftermarket and all these, but that's not what your chart's based on. Your chart is based on the exchange prices. That's typically how it works. And if you're doing that, you want to get the money that traded at night after market to get back in because it all starts showing itself in the price of the chart. Give it the first half hour. Let the morning news sink into. You get a lot of reports come out 9 a.m. Let them come in. Then you start making your moves in the market. That's what I teach. It's what I practice. It's the way that I think you go with it. If you want to see these, it's so simple. All you need to do is go to our website. Under the word research is how you get yourself all signed in, and then there's a member login for you. Or at the very top here, you'll see an icon. Give that a click. That'll take you right there as well. Or as I said, you can hit the Join Me button. Just join on our webpage on YouTube. Just give that a click and you can sign up that way. I'm Ira Epstein. Give us a thumbs up if you like us. I will talk to you tomorrow. Take care.